Hello, everybody. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the fundamental analysis session today. As we get started, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you. Looks like we're up and running fine. If anyone runs into any issues as we go along, just let me know. A lot happening today. We've got the non-farm payroll and jobs numbers, unemployment numbers out of the U.S., which is one of the biggest announcements each month, the first Friday typically of each month. And so that'll occur in about 30 minutes. And so while we're doing the session, we'll be able to see the movements on the charts. You can try and take advantage of some of the potential setups we look at if we get to enough of the charts and potential entry points before the announcements hit. I don't always like to try and guess the movements with the numbers before they come. A lot of times it's nice to wait for the smoke to clear after you see the numbers and then find the trend. And a lot of times the old phrase, the trend is your friend, can apply after some major news. And then there's other news today too that's been driving the markets fundamentally, specifically between China and the US. And so we'll take a look at the headlines on that and how you easily could have taken advantage of that fundamental news already today and moving forward the rest of the day as well as we go into the weekend. So let's go ahead. We'll take a look at some things. Keep in mind, as always, all trades, all investments have risk. There's no guarantee of a profit on any one move. It's why you want to manage your risk accordingly, whether you're using stop loss, a certain percent exposure per position, hedge positions, whatever it is that's in your risk management plan. Make sure you've got yourself covered in that regard. What we go over is not meant to be financial advisement, but should be taken from an educational perspective to help you with your trading plan and strategy to hopefully improve upon maybe your risk management and your profit and loss at the end of the day, end of the week, each week, and so on. So the full risk disclosure statement is on AvaTrade's main website if you wish to read it. Now, as we go forward, keep in mind there are two types of fundamental news, and we're dealing with both today. And so the first type is what we refer to as regular economic events. I say first type, the first one listed on this slide. And so regular economic events are just what they sound like, things that are scheduled regularly each week, each month. We know what it'll be, like the non-farm payroll numbers coming in, the unemployment numbers. You know exactly what the topic is, when it will be. You don't know necessarily what the numbers will be, but you know a lot about the timing and scope of that type of fundamental news. The other type of fundamental news would be extraordinary news that you just don't know what might break in the headlines at any given time, right? And so the story today about U.S.-China negotiations about trade maybe improving and tensions calming down between the nations amid this whole coronavirus outbreak. That created positive sentiment today that maybe no one expected that headline to come when it did. And we'll take a look at how once that news broke, how you easily could have ridden that momentum through much of the day today. Okay. And so how do you know when news like that breaks? Well, regularly check your trusted news sources. And we'll take a look at some that I look at on a regular basis. And you could put yourself on the Twitter account of some key people as well. I have a lot of traders that I've talked to that it's not a bad idea to be on the Twitter account maybe of Donald Trump or some other people who like to tweet a lot and who have influence. And so, if a tweet came out today from Donald Trump that, hey, things are looking good between U.S.-China trade negotiations, if you saw that before the headlines broke, you could probably assume that there's going to be positive sentiment from that. Okay, so it's not a bad idea. And to identify a few key people, get on their social media, and you'll get the information many times before the headlines come out. Okay, and so and the idea is the sooner you get the information, maybe you get in on a move before the movement gets going too far. Okay, early bird gets the worm sometimes. All right, so let's take a look at some of the fundamental news. And I apologize, my voice is a little bit raspy. It's allergy season for me, so hopefully my voice will last the whole session. I'm sure it will. All right, so we see here the scheduled economic event or events here on a schedule like you find on investing.com. Very easy to find when you get on this website. It's at the top, economic calendar. You also can look at earnings releases that are coming out for different companies, which is another type of fundamental news. Falls in the regular economic event category, the earnings numbers, because you know when they'll be and for what companies. Okay, so in 24 minutes, all of this data is coming out. US, Canadian data, a ton of information that will likely cause big movements on the major indices in particular, perhaps on gold, perhaps on oil as well. Okay, and likely not just the US indices, but certainly strongly on the US indices, because they after all, are US announcements here. So these numbers, there are some headlines about expectations, but you can see what they're looking at here. Non-farm payrolls. Usually it's, the question is with the non-farm payrolls is how many new jobs have been created, right? What's the job growth? Usually, 200,000 jobs, 250,000 jobs created. Bad number would be 150,000 jobs created, something like that. Now we're looking at not hundreds of thousands of jobs created, but millions of jobs lost. And obviously this is because of the global pandemic, but you can't sugarcoat those numbers. That's really bad. Millions of people losing jobs, even if it's temporary. And I think most people understand that's temporary. They're laid off because of the quarantine rules, and already states in the US and around the world are starting to open up their economies and unquarantine, and people are starting to get their jobs back. Okay, but these numbers are going to look ugly most likely when the actual numbers come out. Okay, so we've got predicted 22,000. You see the K. The numbers are not usually built to be this big, so it was in the thousands. It's 22,000, which is 22 million, right? Jobs expected to have been lost for this report, okay? And so this is a report for last month, right? So that's a lot of jobs. Now, what if that comes in at 15 million jobs lost instead of 22 million lost? Maybe that's deemed good news. If you can think that something like 15 million jobs lost is good news, it is if you're expecting 22 million jobs lost, right? Or it could come in as 30 million jobs lost. No, there's no precedent for this, really. We can't guess necessarily what these numbers will be. And there's talk about that a lot of people applied for unemployment but aren't counted in the numbers yet because so many people were applying. There's a backlog for unemployment benefits and to officially be counted as having lost your job. So the unemployment rate down here, which unemployment rate under the Trump economy for the past few years, it was down really low. We're talking 3%, 2.5%. It was at record lows. And now it jumped to 4.4%, which really traditionally is low, but that's high under the Trump standards. They're expected now, last month's job layoffs, 16% unemployment. And some say it could be, really the truth of it could be much higher because, as I was saying, unemployment claims, a lot of them maybe haven't been processed. So even if the number comes in below 1,600, maybe the true number, or 16%, I should say, maybe the true number is still even much higher than that that's unemployed. Some estimates 20 to 30% of the population is unemployed, and it makes sense. The entire country was quarantined for the most part. So these numbers, 16%, might not even tell the whole story. And there were some articles that I was going to show you, but they got a bit too technical and detailed and not really necessary to understand the gist of the story. And that is, unemployment rate is going to go up tremendously. Most believe with this report coming out, it will look ugly, and the real numbers could even be uglier than what the number is that shows here, okay, for unemployment rate. Now, all of that probably could swing the sentiment a bit today, right? But the expectation is built in, and the markets are rising today. They have been. So you can't bank on the fact that if this comes in near this number, that's going to be deemed some significantly bad news, even though it looks ugly and it doesn't sound good. The expectation is there that these numbers will be bad already, and people understand why the numbers are bad, and they understand that it's not because there's a bad economy. It's because of, obviously, the pandemic and the quarantining. So you have to understand the numbers are going to be ugly. The predictions are really bad. You might get some bouncing in the short term. I would say you probably will get some bouncing in the short term that's pretty significant on the charts that you could take advantage of. And then things will probably stabilize and run with the overall larger sentiment. Okay. Today, what is that larger sentiment? Everything's green, right? Except the volatility index, which is down, which means fear is down. It makes sense. The futures were green. As the US market opens today, it's expected maybe to be green, depending on these NFP numbers. So futures are green and fear has been down, and that's been all day today. Okay, the volatility index, the VIX index, is a measure of the volatility of the S&P 500 companies in real time. And the higher the volatility, that tends to mean fear on the markets, and the lower the volatility, that tends to mean positive sentiment. So it makes sense that the volatility index is down over 4% today, and the futures are green. Usually when fear drops, the futures are green. Yeah, exactly, Levi. When the VIX is in red, it means fear is dropping, right? Which is good news. That's the one thing that when it's in red means, oh, that's good news for the market. When the volatility index is dropping, that tends to mean, hey, I bet the futures are green, right? And you see it is. S&P 500 futures, NASDAQ futures green. Now you see here, Dow 30, S&P 500, NASDAQ, those green numbers are from yesterday. Those aren't the futures. Those are yesterday's numbers. They finished in the green yesterday, and now the futures have been running today. When the US market opens in about an hour and 15 minutes in New York, okay, New York time, 9:30 a.m. New York time, then you'll see the current numbers for the live market on the non-future indices, okay? And those, if it wasn't NFP day today, the sentiment today probably would cause those to open green. It's been positive sentiment all day, and lower fear all day. But we do have these huge jobs numbers and unemployment numbers coming here in about 15 minutes. And so that could swing the momentum. And so that's why many times I like to see the numbers first, then wait for my preferred entry point, technically speaking, and go in the direction that the fundamental news that's already known tells me I should go. Some people try to guess the numbers. Okay, if I was a guessing man, the numbers are going to look bad for the NFP numbers as they come out, but people might be surprised by the underwhelming reaction to the bad news, meaning I don't expect maybe a big panic from bad jobs numbers and a higher unemployment rate, because everyone understands why that happened, okay, and that it could easily be reversed as the pandemic disappears. But certainly there will be volatility on the charts. There always is surrounding the NFP day numbers release, okay? So let's take a look. Other things around the world, you're going to see more and more of this over the next months. Bearish news about different economies around the world. India may see 0% GDP growth this fiscal year. You know, that's bad, right? Really large country, lots of people, 0% GDP growth. Obviously, this is because of the global pandemic. It's expected that these bad numbers are going to keep rolling in from different major countries around the world through the next months, okay? So as there's positive sentiment bringing markets up, you're also going to have opportunities to short the market as various gloomy looking numbers like this one are reported, okay? This report wasn't enough to overcome the positive momentum created here. US futures higher as Chinese tensions ease. Okay, that was the big news today. That's why the volatility index was down. That's why the futures are green all day long, because positive momentum about US-China trade negotiations. The news came out today. One of the representatives from China and some of the representatives in the US dealing with the trade negotiations said they're looking to get on track and work things out. Okay, so that was the good news today. It was really the driving force. It only takes one headline like that, and then you know which way you might prefer to trade as you get on the charts. Okay, so let's go ahead. Oh, and I wanted to show you this. Great Depression like US job losses. Unemployment rate expected in April. So they're expecting the unemployment rate for last month's numbers, which are about to come out in less than 15 minutes, to be like numbers from the Great Depression. Okay, which is a very dark, gloomy time in US history in terms of economic situation. But the fact is, it's for different reasons, right? We understand that as well. So there might be some fear as the numbers first come out. That's why I'm saying expect volatility on the charts, expect potential pullback, but then be ready for maybe a surprise when investors decide they're going to shrug off those bad numbers and go with the good news about US-China that's in the headline all day today. Okay, so let's take a look on the charts. Let's see what's happening or what already happened. Not unexpected. What did the Australian dollar do today with good news out of China? And let's draw a line of where maybe some resistance levels were. This was an old resistance level, resistance, resistance, resistance. Breakthrough becomes support. Okay, classic breakthrough candle, classic flip of a resistance level becoming a support level. Okay, resistance, resistance. This is going back a few days. Another resistance here. This is coming into yesterday. And then as the news broke about China coming into today, breakthrough candle, classic breakthrough candle, bigger than most of the prior candles, and blows right through the resistance. You could have had a buy stop up here, even if you didn't know what the good news would be, anticipating that if there was good news with China and US, if this resistance level got broken, then it would become a support level, which it did. Okay, so a purely technical trader, which is not what this webinar is primarily about, a purely technical trader would have been in on this move even without knowing why it broke through the resistance. Just by simply putting a pending order above this resistance level, maybe you looked at it last night and saw a resistance level, you put a buy stop pending order above the resistance and say if it breaks through, must have been good news. And boom, it breaks through. And look at the resistance level classically becoming support. It comes back down and hits the old resistance as support and then climbs. Okay, that's a classic technical strategy with a pending order. This the hell? Okay, testing, testing. Are you hearing me now? Okay, great. Don't hesitate. Give me as quick of an update as possible if the audio goes out. Maybe I bumped the USB plug going into my computer. Okay, so I was getting a bit excited maybe and shifted around. Classic breakthrough candle, okay? Resistance, 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 breakthrough pending buy stop would have gotten in. This is your classic technical trading strategy that doesn't rely necessarily on fundamental news, okay? Easily, you could have put a buy stop above this resistance. It was there through the week this week. It was there last night. And then you put your buy stop up here saying, hey, if there's good news between Australia and China or US and China, the Australian dollar will probably break through, right? So a technical trader really doesn't care what the story would be, but puts the buy stop up here saying if it breaks the resistance with a breakthrough candle like this one, then it must have been good news, and up it went. And you can see classic setup. Once it breaks through, the resistance became support right here at the exact same spot the resistance was. Okay, so resistance, 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 breakthrough, support, and it climbs. So a buy stop pending order works perfectly in that example. Now, more powerful, as I was saying when the audio disappeared, is the fact that you could have said, well, I know there's huge things going on with China. And I know Australia's #1 buyer of their #1 exports, iron ore, coal, etc., is China. China's the #1 buyer. And so as China goes, so goes the Australian dollar many times, okay? So not only would the technical trader have put a buy stop above this resistance last night, recognizing resistance, resistance, and approaching the resistance again, waiting for a breakthrough with a pending order right up here. How do you do that? Switch market execution to pending, make it a buy stop, and you say, you put the price that you want it to buy from. If it breaks through the resistance, you have a price above the resistance for it to buy. You can put your stop loss just back below the resistance, only risk a little bit, and your take profit maybe up at the first next resistance level. So in this case, it would have broke through, activated your buy stop on the second line I drew here. As an example, it tested the support. Your stop loss would have been back below the support. It never broke it, and up it went. Your first take profit mark might have been the first resistance level that it gets to, which was here. Support, support, breakthrough. So this is the old support, which would be resistance as it comes up. And that's right where it consolidated and moved sideways. As it approached the next resistance level, all of a sudden it starts going sideways. Okay, so easy strategy for just a technical strategy, and then even more powerful to know that you would have chosen the Australian dollar against the yen, knowing that there's all kinds of negotiating and news going back and forth about China, the US, and Australia right now. The US and Australia in particular have been really not happy and been voicing their unhappiness about China. And we know Australia and China are huge trade partners. So any good news makes sense that you had this powerful breakthrough candle. Now, if you saw the good news and you missed the breakthrough and you saw the good news in the morning, okay, no problem. It came down, it gave you a second chance from the support level. The old resistance becomes support. Any of this time here, you could have entered still and put your stop loss below the support, seeing that it broke the old resistance. You trust it as support now, especially when you saw the fundamental news saying, wow, fear is down. With a quick look on investing.com, we saw fear is down on the volatility index and the futures were green. So why not trust the support level against the yen? And type okay if you're still hearing me. Okay, so one person just typed that they're not hearing me. So I'll type audio is up. Okay, so thank you. I have enough responses. Okay, so what I'm saying is, why would we pair the Australian dollar against the yen? Why is that a unique combination to get good price movements, to get good action on the charts? When there's good news for China and the US and Australia, and the Australian dollar strengthens, why would that be good to pair against the yen in particular? Yeah, it's a safe haven. Good, David. And what happens to safe havens when there's good news? They tend to do what? They tend to weaken. So if we would expect, if there's good news about US, China, Australia, China, if there's good news about that whole situation, and then we expect the Australian dollar to strengthen because of that, you would probably want to pair it against something that you would expect to weaken at the same time, which would be the yen. And look at the breakthrough. Look how powerful that movement was. And look how it acted perfectly as support after the breakthrough and the big climb up. Where would you take your profit? At the first resistance level, which I've drawn here. And that's where it went sideways. That's where it consolidated. It turned into a worm, right? Moving sideways. So that's where you might take your first profit. Yeah, someone's still asking about the audio. I'm just typing all have confirmed. Audio is on. Okay. All right. So any questions on this strategy and why, with the fundamental news in particular, we would have paired Australian dollar yen and gone with a buy off of this support level if you didn't use a pending order, or why the pending order would have made sense? There's nothing magical about the 1 hour chart, Jagdish. Good question. It just happens to show me the support levels nicely and gives me enough information to see clearly through this whole week. Okay. So what I'm showing you here is a strategy that some might refer to as scalping. Okay. And so when you're scalping, you're probably not looking at 1 week candles, right? You're looking at 1 hour candles, 4 hour candles, maybe 15-minute candles, 5-minute candles, etc. Because you're looking at smaller movements. And so this was a resistance level in the 1 hour candles. It was there for good time. I like to see my support and resistance levels to have multiple points of contact. So you have 1, 2, 3, 4 points of contact representing a pretty solid resistance in the price. So it had to be big news to break it. And once it broke, that buy stop is powerful and a solid move maybe because it took many tries to break that resistance. So it must have been big news to get past it. And indeed it was. Okay. And so then you say, okay, if it was that big of news to break a resistance level that's been there all week with 5 tries to break it that failed, if it does break through, then I probably can ride it all the way to the next resistance level, which is exactly what happened here. Went right up to the next step in the price levels before it fizzled out. Okay. Herman, you're asking on what news was this? I'll show you real quick. Here, U.S. futures higher as Chinese tensions ease. Okay. It goes on to say that U.S. and China earlier today started talking again and being nice to each other about finishing up on their trade deal and getting the economies going. And that was like huge news. The volatility index down, futures turned green all day long, by the way. Wasn't like just now that happened. Herman, it affects the AUD because the Australian economy depends largely on China. Their number one exports, iron ore, coal. China's like their biggest buyer. Okay. And so as China goes, so goes the Australian dollar many times. So if trade negotiations between the US and China are deemed as positive for US-China economies, then that's deemed as positive for the Australian dollar. Okay. Good question. And why against the yen? Because with good news, the yen should weaken because it's a safe haven currency. So it tends to weaken when there's good news, when the sentiment is positive. A quick thing to look at, you just look at the volatility index here. When the volatility index is red, meaning dropping, fear is dropping, then the yen tends to be dropping in strength as well, generally speaking. Okay. All right, so let's look at some other assets, and we'll look at oil too. I see someone asking about oil. Emmanuel, we'll take a look at oil as well. Now, in about 1 minute, we're going to see some huge movements. Let's look at the Dow Jones. Okay, the numbers are coming out right now for NFP. Okay, it's what, 15:30, 1:30 London time. So this should be coming out any second now. It's 29 after, actually, so in 1 more minute or less than a minute. Well, that's interesting as well, Adam. If you've got positive trade surplus news out of Australia, so that's going to help the Australian dollar as well, obviously. Okay, here we see support level on the Dow Jones, and again, you could have traded this breakthrough, just like the Australian dollar I showed, this breakthrough earlier today on the positive news and rode that up. Okay, so same setup with the U.S. indices would have come through before these announcements. Okay, then you have the support level that you could be trading up from, and look at it bounce off the support. Look at that. Okay, bouncing up off the support. Now, we can look at what the news was. Again, your purely technical trader would have been buying off this support level anyways. Okay, now the fundamental news looks like, at least temporarily, it's bouncing off the support. Now you've got your first resistance level here. Okay, this is getting close to that resistance level. A scalper would take profit already. Okay, it already jumped 100 points, 100 full dollars in value per indice. It just jumped in the past 2-3 minutes. So here's the first resistance level. It got near that. You could have already taken profit off that first resistance level coming up off this support level. Okay, very nice movement. If we look at it like 5-minute candles, now it looks nicer, right? Support, support. This was from earlier today. This was the breakthrough. This was the climb you could have traded on today with the positive sentiment. It was on the support once. You could have traded off of it before the announcement with the positive sentiment. It's on the support again, and like clockwork, right off the support level, up it went a third time. So before the announcement, you could have traded up off the support once, twice, and after the announcement, a third time. Okay, now let's go look at the numbers. I'm curious what the exact numbers were that just came out. So let's have a look. Economic calendar, and here we go. Everything better than expected. So no wonder it's jumping, right? Anurag, I'm glad it's working. So now, do we trust the support levels more, or do we think the support levels will break on the Dow Jones, NASDAQ, S&P 500, Australian JPY, etc.? I think I trust the support levels more. Why? Because the numbers were slightly better than expected. Now, again, still ugly numbers, right? It looks pretty to be in green, but 20.5 million jobs lost last month. That's a huge number, right? But it's better than expected, okay? And people expected bad news. So better than expected is nice. And usually when you get better than expected news, you get positive movement on the US indices. Okay, makes sense. So let's take a look then. Private non-farm payrolls decreased less than expected, but still in the millions, 19 plus million. Unemployment rate, not 16%, 14.7%. Okay, amazing that jumping from 4% or unemployment rate to over 14% unemployment rate is deemed good news, but that's the situation right now. Better than expected news on all of these numbers, but still ugly numbers. Keep that in mind as well, but better than expected. Now that adds to the positive sentiment maybe with the China-US news today. But trust me, there will be people ready to sell on these climbs. You see already. Remember I said first resistance level, you might think about getting out? Look at that. It got near the first resistance level and down it went. Okay? So it's going to test this support level and then decide what to do. Many times with a day like NFP, it doesn't stick with just what the news is, meaning there's a lot of volatility. This easily could break this support level and drop a bit and then go back up. Okay? This is the way it happens right after these major announcements. So in general, positive sentiment still today. You could wait and be patient and try and find entry points that you like best. So let's say you still want to buy and not sell. Maybe you say, okay, if this drops to the next support level, which is right here, right? This was this morning's resistance level. Resistance, resistance, breakthrough. If this returns to the next support level down here, maybe you buy. Okay, that's an opportunity maybe. Buy limit. Yes, David, that would be a buy limit. You could program a buy limit down around 22,990, something like that, 23,000 even. Or I'm sorry, 24,000 even. And if it hits that mark, you could get in again. If you're more confident with the bullish news, you could buy now, right? And put your stop loss below the first and the second support level, and then just be more patient. Those exactities are up to each individual trader. Do you want to wait and get a more perfect entry point and hope it pulls back down more? Or are you saying, I'm a longer term trader, I think overall this is all good news, and so let me put my stop loss just a good distance down below a couple support levels, and I'll wait, and I don't have to have a perfect entry point, I'll buy now. Okay, those are different philosophies, and one's not more right than the other. One is more of a scalping strategy where you wait for opportunistic, in this case, support levels maybe to trade up from. And the other strategy is I'm not trying to get in and out in the next 15 minutes. I don't mind putting my stop loss down further and being more patient for it to rise. That's a more of a long-term view. And you could do both at the same time, right? Okay, so let's look at some other assets that would be related. How about some indices not in the US? Same thing's happening, right? Look at the positive momentum today. Upward movement. This actually gapped with the China news. Okay, it gapped up with the China news and found resistance up here and broke the resistance with the NFP move. So it broke the resistance with the NFP move. You could wait for confirmation of a sustained uptrend. How do we do that? If you only want to buy on the DAX right now, if it confirms the uptrend again, what kind of pending order do I set? Buy stop, right? Type OK if you're with me. Okay, good. I didn't see any responses, so I was afraid the audio went out. Okay, so yeah, buy stop. So the idea of not buying right now is, okay, maybe it's going to pull back. And if it's going to go above this resistance level, then I'll buy if it goes to a higher high point with a buy stop somewhere up above this wick, right? If it breaks above this high point, it confirms a continued uptrend. Then you get in with your buy stop and put your stop loss below the first resistance level, or if you're more patient, below the second support level. I said resistance. It's resistance now. It would be support if it breaks it. So if your buy stop gets in, more of a short maneuver scalping, you might only put your stop loss back below that first broken resistance. If you're being more patient, you'd put it below the next support level as well to avoid the little spike back down, hitting your stop loss too quick. Okay, so some opportunities here after the good news on NFP. The indices are responding in kind. Here's the S&P 500, same setup. You could put buy stop above the resistance. If it breaks to a new high, you could go with the momentum. Okay, let's look at crude oil. We've got some requests for crude oil. Okay, so here's crude oil. I'm looking at 30-minute candles here. We've got a support level I already drew from the past webinar, down around 22.6. Support, and it's up above that. There's no clearly defined spot that it's at right now. It's right in the middle of, maybe some resistance up here and support down here. So it's kind of wiggling sideways. Nothing major happening right now with the movement of oil. And usually it's not as dramatic of an asset to respond to the NFP numbers. It's more the indices, the stocks, and the currencies even that respond more strongly. But in general, what do you think this does for oil price? Good news about China, US. Somewhat good news about the bad numbers coming out of the US today. What would that do for oil prices, do you think? Yeah, tends to be good. if you deem higher oil prices good, tends to be good for oil prices, right? To help push them up. So you might then say, okay, if this is what I believe the fundamental news should do now, if that's what you believe, then you say, okay, where's my first resistance level? And I say, here. Here's my first resistance. It tested it here when the NFP opened, when the numbers came out, oil spiked up and pushed back down. So similar to the indices, if it continues with an uptrend, you could have a buy stop waiting to get in if it breaks above this resistance level here. This was the spike with the NFP numbers right here. Okay, so if it breaks above and establishes an uptrend above this first resistance level, that could be a spot to get in on oil as a buy stop. And your first take profit, if you're scalping, is right about here at 26 even. I'm not going up to this resistance level. I'm looking at this one over here. Okay, resistance. And now if it breaks through this resistance, the first spot it reaches of resistance is that one right there. Okay, so if you're a scalper, that's a good about amount of potential profit from here to here. Breakthrough buy stop triggers. If it goes to the next resistance, that's over a dollar climb per barrel. That's a nice move. You can scalp a lot of profit with a dollar move in oil. In this case, more like $1.20. Okay, 1,000 barrels makes you $1,200. One lot. So depending on your balance, you could trade, the right trade size accordingly. But a buy stop activated somewhere right above this resistance could be a decent potential move, and your stop loss would only need to be right back below with a small risk. Okay, and again, we're using the fundamental news to determine which direction do we prefer to set up some pending orders now. And like I said, I like to wait for the smoke to clear after the numbers came, because now hindsight is 2020. We already know, okay, it was better than expected news. We already know that goes with the momentum that already existed today. So now I'm preparing maybe buy stop opportunities. Any questions so far? Okay, Emmanuel, good question. And it depends. The answer is it depends, right? You're asking, is it better to do intraday or a long-term move? Some traders like to take advantage of the momentum that exists right now and take that profit. Others project more. And I can show you some projections on crude oil very easily. Let me pull up a website that probably all of you should know about. Let me find it. Just take me a moment. It's the Chicago Mercantile Group website that I'm looking for. And let me just find the website. You know what? I think it's just cmegroup.com. Let me see. cmegroup.com. Yeah, that's it. Okay. So let me pull it onto the screen. Okay. Type yes if you are seeing the CME Group website now. Okay, good. So if you go to this website, cmegroup.com, they list the futures contracts for oil. And I don't know if you're aware, but we trade on futures contracts. That's why there are rollovers with crude oil. Now, recently we started offering individual contracts to trade on that will expire rather than the asset where we roll you over to the next contract. So you have your choice now. You don't have to have a rollover. You can choose the individual contract for July, August, etc. Or you can choose the one that just says crude, which will be rolled over for you if you have open positions. If you have questions about rollovers, talk to your account managers. So on this website, you click on energy. And then we go to crude oil futures. It's the first one listed here. And then we go to quotes. And here are all the upcoming futures contract prices. Okay, AvaTrade is currently on the June contract. We rolled over to June when the last one was about to expire. Okay, and what do you notice about the further forward in time you go? What do you notice about the price that if you wanted a contract that expires further in the future, are you having to pay more per barrel or less for the right to hold that contract longer? What are you noticing about the price? Higher or lower? Yeah, they're higher, right? If you go forward to September, it's 28, right? That price right now, it's higher. You know, we have some of these contracts available on the platform to trade, okay? And yeah, they're at higher prices because you can hold it longer without the contract expiring. Now, the fact is, if you're trading on the current contract where we list it without the contract date, then you can trade it as long as you want. Eventually, it'll roll to the new contract. So what do you think investors believe will happen with the price of crude oil over time? What does this suggest to you? If they're willing to pay a higher, yeah, they think it'll increase. If they're willing to pay a higher price for the right to hold the contract longer, then most investors that are buying into these think, okay, I'll pay a higher price if I'm allowed to hold it till December, because they think it'll be higher than this price by December, right? Or whatever date you're choosing. And it makes sense because the pandemic will hopefully be over. Economies will open back up. There's been production cuts, exactly. Good question, Thomas. Why are oil prices going up when there's still a supply glut? And the answer is sentiment. Sentiment. Because why is there positive sentiment on oil? Two main reasons right now. OPEC, the US, and some other nations like Russia have agreed to production cuts. Took a little pushing from the US's side to maybe threaten pulling military support from Saudi Arabia and maybe others to get them to finally say, yes, we'll cut production. The news broke like last week or earlier this week that's how it finally got done. It took some stern negotiation on the US's part. I guess it makes sense. Trump wrote the book, The Art of the Deal. So that created some positive sentiment for oil prices to go up. Just the idea that they're cutting production, not that the oversupply is gone. There's still tankers off the US coast that don't have any place to put oil, and they're just floating around like bobbers out there full of oil. So there's still a supply glut. But the sentiment that created that, hey, there's a deal, they're cutting production, drove prices up for the anticipation of what that will do in the coming months to the oversupply of oil. Then the second thing is positive sentiment about these economies starting to open up around the world as the quarantines are being lifted. Okay, and so if quarantines are lifted in the US and other major countries around the world, China and European nations, Spain, Italy, etc., Germany, then what does that do for demand for oil if these economies start opening back up and people are driving around more, etc.? Okay, so the anticipation that these things will improve the situation for oil has driven oil price up. Okay, it isn't that overnight the supply glut disappeared. It certainly didn't. Okay, very good question. And a lot of times movements occur before the action actually happens, right? So now if the supply glut starts to shrink, maybe the price already went up in response to already expecting that to happen, right? Sometimes the phrase is, the movement, the price is cooked in, right? When someone says the price is already cooked in, meaning, maybe it was expected that the numbers today would be better than expected on the NFP, and that's why the markets rose. And so after the good numbers came out, you don't get as big of a move because the price was already cooked in, right? That's how the phrase works. Now, I don't think that was the case. I'm just using that as an example, probably a bad example, because it was the US-China news that drove the markets up today, and it looks like even more positive momentum with the NFP numbers maybe. Okay, so this is a good website. Write down the web the web address, cmegroup.com, and then I'll walk through where to find it. And you should be aware of the contract prices, what they are. You can see a general trend of the direction that most expect the price to go, right? In the long term. So if you're a long-term trader, you better take a small enough trade that you can put your stop loss far enough away to get through some of these negative bumps if you want to hold it till December, right, without getting stopped out. Because the small movements down and little breaking bad stories that create bearish movement on oil, you don't want those little moves to stop you out, okay, if that's what you think will happen. I'm not saying it's going to go up to 30 or 40 or $50 a barrel, but that's what these numbers kind of lead you maybe to believe many people think, okay? All right, so remember, any type of unexpected breaking news can change the trends, right? And that's why you use a stop loss or a pending order as a potential hedge position in case the movement's reverse on you. But you also have to go with what you know, right? You have to use what you know to your advantage as well. Let me get rid of that. And I think that's a good place to stop. We've been going for near an hour. Any last questions before we finish up? Questions where to find the date. On AvaTrade's website, there's a heading at the top that'll lead you to the futures contracts, and you can see the exact date for rollovers for oil and other assets that are traded on the futures. If you're on regular crude, the one, I think it says crude spot now. It's not really spot. It's the current most current futures contract. If you're trading on that one, it rolls over automatically when we roll over. Thank you, Adam. I appreciate that. If you're trading on an individual futures contract that's listed on our platform, then you can close the position manually before that contract expires, or when that futures contract expires, the trade will be closed automatically. If that answers your question. Okay, great. Thank you, everybody. Thank you for the questions and the input. It's really helpful for everybody attending and for myself to communicate good information. We'll be back at it Monday next week, later in the day, 6 p.m. London time. Feel free to attend, and between now and then, have a good weekend. All right, bye for now.